Welcome back to another Mortgage Minutes. I'm Jim Black, and I'm dearly missing my good buddy Tristan today, who's busy recruiting for his big team. A lot of great things happening for him and his company, Y Realty. Anyways, with today's updates, I wanted to talk about what's happening in the marketplace. So we always assume that the magic number is 6% for interest rates. Well, we've gotten now to that number or lower than that number in the last 3 days. What that means is you're going to find a lot of people getting off the fence of making a decision to either refinance or maybe buy a home or maybe go do something else. With that, it's really important to think about ways that you can stay in front of your audience, your database, your sphere, and making sure that you're relevant. So today we're going to talk about relevancy. A lot of times we'll find that people will decide to react to interest rates versus be proactive. And sometimes those rates are not available after the media already talks about it. So we want to help people stay ahead of the opportunity to take advantage of lower rates. If they're getting pre-approved or they're looking to buy, it's very important to think about that. With rates dipping below 6% today, we are seeing a major tick up of activity. And for smart buyers, they're getting in front of the crowd. They're getting in front of the opportunities to go buy homes. So I think as you see rates go lower, I think we're going to get down to about 5.5% on the APR element. With that push down of interest rates, you're going to see a demand pick up, and it's going to be more competitive as a seller to sell your property. So you're going to see that there'll be a lot more buyers coming to your property. One of the other things we're seeing still effectively across the country right now is seller credits. Seller credits can be up to 6% depending on the type of loan transaction. That means that a buyer could walk in and offer a offer price and get up to 6% for closing cost credits. Those credits can help offset things like an impound account, which is property and insurance, closing costs in terms of title and escrow fees or lender fees, or the opportunity to buy the rate lower. Whenever you look at buying down costs, you want to look at the break-even analysis. And that means you're looking at the cost of getting a lower rate versus a savings, or the opportunity cost to make sure that you're allocating that credit to the right things. If you're not getting a lower interest rate and you're just paying for closing costs, that's one way of looking at the opportunity, which would be basically saving your out-of-pocket expenses. Another way would be to look at driving the interest expense lower over the life of the loan. So when we look at this, we want to think about the cost versus savings approach. One of the best tools that I like to use is checkrefi.com. This is my own platform that we have created that keeps people ahead of information as they want to make decisions. So for example, how you look at that is you look at this document here that shows an example of a refinance. You basically can set up your own fields. We don't pull credit. There's no commitment. We help you track the market rates, the break-even expenses, regional trends, and help you time everything. So we try our best to keep you in front of opportunities. A lot of times when we think about refinancing, for example, or even buying a home, people aren't aware of the actual rates. In the last 3 or 4 days, they've been surprised that those rates have been better. So for example, if your rate on average is over 6.5% today, which is a majority of the loans that are out there now, you might be overpaying for current debt. Again, be aware, please, that every single scenario is unique and different, and you're not approved until you get through the process of applying and getting a final underwriting decision. Here are a couple examples of stories that you could share with your own database and your own sphere of influence. So for example, in Sarah's stories, she had a loan of $500,000. That rate was at 7.5%. And she was set up and was able to save a difference of 6.1 on the rate if she was to wait and have the right timing of things. So in that example, it would be $127,000 in different interest expense over a 30-year period. Remember, it's about your goals, the timing for your clients, and their motivations. My motivations are different than your motivations, and what's important is to think about being there and providing value at the right time. So what we do basically is we look at intelligence around ways to stay in front of where rates are going, closing cost benchmarking, which means looking at the cost versus savings, and make sure that we are looking at the best lenders to work with. Any good lender out there would have multiple options on the same scenario to make sure that the client gets the best opportunity or offer. So, what's important to think about is ways that you can stay in front of helping people and being there in front of that activity or call to action. So, this is one of those tools that you could use as a real estate professional to help your clients be aware of providing more value to them. If it's giving a CMA for a updated valuation for their estate, or if it's something around seeing that their life goals have changed and maybe they need to take cash out to help them with the ability to be able to improve a property, add a bathroom, add a bedroom, whatever it might be. The key is really to think about what tools can you give yourself? How can you be ahead of the opportunity before it happens? Because when you're reactive, most likely it's already too late for that to be anything of substance, anything of value. And you want to be able to lead with value so that you are the go-to resource. You are the beacon of knowledge around real estate and lending. So this again is just one example of a myriad of examples out there that we use to stay in front of the opportunities. We are monitoring this 24/7, and we have things built in like AI predictability scores and other things that allow us professionals to be available and relevant when we're needed. So if you're looking for any tools or resources to think about, if you're a realtor, think about ways that you can stay in front of your client with providing value. If you're a lender, you should think about creating a funnel which captures attentive people that are looking to do something when it's time. So right now, for example, we're monitoring over 2,000 homeowners in this journey to make sure that we're providing value to them when they need it. Again, there's no credit checks in this example, so it should not be a heavy lift for someone to input their data points to get value added activities or responses when the right time happens. In terms of interest rates, we've seen interest rates go lower with a lot of the uncertainty in both the world markets and with our economic growth data that just came out. Our growth data came out worse than expected. Our GDP, gross domestic product, which is our indicator of consumption and spending, has gone down dramatically. And there's a lot of job reports that are conflicting right now that say that jobs, for every one job created, there have been 20 jobs that have been eliminated. So that's not a really good trend right now, especially in specific high growth areas like technology and other things that are helping boost the economy and surge the economy. We are seeing across the country right now level pricing with, again, a lot of credits for new construction builders and other traditional sellers that are trying to incent a buyer to choose their property versus some other property. So work with your favorite local lender, work with your favorite local team, build a value added proposition so that when you're presenting to those clients, you can show them that you are the right choice. You are the beacon of information and knowledge. You are the connector of the right resources at the right time. And when you take this approach, you're providing value without an expense. It's just something you're giving as a go-giver mindset that makes you stand out in the crowd. Wow, Tristan didn't try to sell me on something. Wow, Jim offered me a valuable tool that has no cost and no harm and no commitment. If you're adding stuff of value, you're top of mind, you're providing a resource, and you're there when people need you. I missed my friend Tristan today on our TN5. We're excited to bring you this next week, and stay tuned for more. As rates go lower, you want to be in the know, especially with this time of year when inventory starts coming online and rates are going lower. It's a great thing for creating more homeowners and happy sellers. Have a great day. Thanks for your time.